Good morning. Today is Monday, June the 27th, 2016. The pre-market shows at $1.69 negative, 4.5 million in volumes. So this is Monday, and it is the continuation of what happened on Friday. This pattern over here, I knew that this was setting up for a massive drop. I couldn't bring myself to invest on Thursday at the close for a Friday opening. I figured, no, this thing is going to top out a little bit and then drop. Brexit just helped this thing turn, and it was almost an $8 drop. Then throughout the entire day, we had on opening a bounce of over $3. $3.52. Then a continuation. There were several moves that could have been taken advantage of. My lack of confidence, not lack of technical prowess and analysis, because I called the 205s, and then I called the 204s, I think. And then I figured, okay, the drop is magnificent. Let me just allow the 15 to pull back. And so that was this moment here when the 5-minute is getting ready to drop. I call it 204s or the 204.50s. I probably would have gone for the 204s. Right at this point, I made a video about this. You should take a look at it. Now today's Monday. Mondays are important because on Monday we have the new plot on the weekly interval. And so we're going to take a picture of this right here. And I'll come back and show you the whole thing. So here's the 5-minute interval. This is the pre-market, and here's the open. Take a look at the continuity of that hourly. It's huge. Take a look at the 15 turning down, the 5-minute. So now we are at 201.44. And the drop continues. A position on the 203s would have been incredible. Now take a look at how every time the 1-minute turns in the direction of the trend, you have a pretty significant advance. From above 204.50 to 203.50, that's $1. Then over here, from above 204 to below 203. And then over here, from 204, almost 50, to 201 now. That is a huge drop. Now here's the 60-minute time lapse. That's closing on Friday, opening today. Take a look at the weekly. The weekly is completely grabbing momentum. Take a look at them. The daily. Wow. Now, we are definitely creating a pattern over here. The drop so far is at $2, 9 million in volume, 9.6 million. And now let me show you the weekly time lapse. This is the weekly on Monday, June the 20th. Take a look at how the daily was in the middle of its pullback after driving the price down here. Now it's pulling back. The weekly happy to continue the upside. The monthly in entrenched negative divergence. The quarterly turning on a 15-year-old negative divergence. At this particular point, you have the possibility of a continuation, but the continuation can only happen if the lower time frames fuel it. If the lower time frames stop fueling upside, the upside stops. And at this particular point, the weekly had been fueling upside with this incredible poise right here. Then erosion takes place on the daily. We have a technical top. And from this technical top, we start building a structure of negative pressure on top of this weekly. So the price suffers a series of pullbacks and continuations painting the uptrend and the channel regression. The channel regression over here starts curving towards the right. A pattern is born. Now you have a daily negative divergence against a very poised weekly. Now, I'm going to go to live charts so that I can click on them and I can make the correlation here. So let me show you the time lapse movement from the 20th. Let's remember we're over here on June the 20th. This is last Monday. And so here's the plot today. Take a look at how that monthly has frankly turned in the direction of one of the most, if not the most, perfectly technically painted negative divergences on SPY in its history. This is a perfect retest, technicals below the signal, loss of momentum on the time frames below that fuel the continuation to the upside. This is a very entrenched reversal pattern. This pattern is going to reverse the trend, and we're going to trend down. This monthly negative divergence is in the beginning stages of its power. Take a look at how the quarterly also turns. I'm back on Monday the 20th, Monday the 27th today. Take a look at this quarterly. Boom, down. Monthly, down. Weekly, down. Daily after the pullback, down. Now let's go to live charts. Over here we can see that after the opening we had a little bit of a pullback and continuation, so this is introducing weakness to the 1 minute. So at some point here it's going to technically bottom. We have an upside divergence on the 5 minute. We have an upside divergence on the 15, and we obviously have an incredibly strong trend to the downside. Now at $2.32, 13.6 million in volumes. Let's go over to this chart. So over here, now I can click on it and we can relate. This is the daily negative divergence that took place on the incredible poise of the weekly here. So this negative daily divergence works and brings the price down. There's a couple of little pullbacks on trend here. The trend now being established by the daily, and it is pulling back against the poise of that weekly that's been parabolic for a long time. And so the job of this daily is to introduce weakness to the uptrend of that weekly. We need to, in order to have the turn, and if you have been following my videos, you will hear me say this over and over and over again, we need to introduce weakness to the direction of this weekly via a pullback fueled by a negative divergence on the daily. So if that happens, then this thing starts pulling on, technically. And that means that you're fighting the uptrend. So this thing runs out of fuel and it does its job. And its job was to introduce weakness to the uptrend on the weekly. So the weekly flattens. It acknowledges the drop, but it doesn't concede defeat. It doesn't necessarily completely turn to the downside. But at the same time, this daily runs out of steam, and then you have the time frames below it start bottoming positive with upside divergences. So how many times have I said, when the technicals get long, that means that you're fighting the trend, either up or down. In this case, we're pulling long to the downside here. That means that we're fighting the uptrend. So the uptrend prevails the lower time frames. If I go here, watch. Here's a daily hourly sell. This is the same thing we were looking at over here. So all I did is put the daily here. That's that same chart. And so over here, take a look at how the daily here gets long, and you have immediately an upside divergence on the 60. So at this particular point, you have to ask yourself the question, well, what's going on with the weekly? And the weekly at this particular point in time is still powerful to the upside. It has flattened some, but it's calling the price back up. It hasn't turned. And now you have a positive divergence on an hourly chart on top of the fact that the daily has ran out of steam. And so the daily was introduced weakness via pullback and continuation. The pullback and continuation gives you the positive divergence that you see here on the hour. So this hourly chart plays out and it introduces weakness to the downtrend of the daily. So the daily acknowledges it stays short on the upside, then the hourly runs out of steam, and then you have a continuation to the downside. But take a look at how on the continuation to the downside, the upside pressure continues to build. We are price-wise bottoming lower, but technically we're bottoming higher. So when the lower time frames below the hourly turn up and their down cycles end over here on this pattern, then you have the continuation of the long-term trend. The weekly, in other words, wins and the uptrend continues. Right here, take a look at that weekly. The weekly flattened, but it didn't turn, and now we have an upside divergence over here. Now, this upside divergence on the hourly is a little wide. This is when you can make it more cohesive and bring in a 2-hour pattern. And that was here. You can see it. And so the uptrend continues right here. Let's go back to the hourly. Then you have the hourly run its course on its up cycle, but the weekly has already turned up. The hourly runs out of steam on its up cycle. It pulls against the uptrend. Take a look at technically how we again get long. Technically, we're pulling long against what the price is doing. The price is struggling to come back down because the uptrend is now established. We pull our technicals long, then you have another continuation. This continuation here, if we bring back the daily chart, yields a negative divergence on the hourly on a daily that has been uptrending but suffered a pullback here and then a continuation. This introduction of weakness in here is because we pulled back and then we continued. The pullbacking and continuing either on the downtrend or uptrend introduces weakness to that particular time frame. Hence, see, you have the continuity of the trend down here. You introduce this pullback here, which is this pullback here. Then you have the continuation. On the continuation, you have interrupted the smoothness of this MACD. Now it's broken. That is weakness. That is a pattern of upside underneath. The same thing happens here on the uptrend. You introduce a weakness because the price pulls back. Take a look at the technicals over here pulling long, fighting the uptrend. Then you have a continuation when the lower time frames lose momentum to the downside, and then they start bottoming positive. This bottoming system here means a positive time bottoming on like a 15-minute chart. And that was right here. As a matter of fact, I need to go back in time more. It's right here. Right here, see, this is the introduction of that weakness. Take a look at the bottoming. Boom, 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 boom. This is an upside divergence on 15. This is an upside divergence with a triple bottoming. If I call on the 60 here, most people that are following over here are probably going to lose me. But this is that pattern right here. This is where we start bottoming over here. And if I bring back the hourly, that pattern will come back. Let's just have our zoom back. This is that moment. So it's right here. You just gotta train your eyes to identify the charts when you zoom in and out of them. But this is, it looks a little more squeezed in here and a little more elongated over here. This is it. It's the same thing. So I just showed you how the 15 starts bottoming positive. That's upside divergences that carry the price up again. So we have now a continuation. Let's not forget that the long-term trend is still very much alive on that weekly. But as we come up and we top out over here, we then introduce the weakness that I'm talking about on the dailies. And now these dailies, poised MACD, has been compromised by a pullback and continuation. It's like a wire being bent, and then you fix it again, but you introduce that weakness. That wire is no longer strong in here. So now that yields a negative pattern in here. Again, just like in this one, it's a little long. Bring in a 2-hour chart, and let's take a look at how that looks. That's a 2-hour negative divergence. That it's very nicely organized. You can go back and study my videos for this date, and you will hear me say, this 2-hour has to play out. And you have to compare it in the context. What's the context? Well, the context is a topping on the daily that's negative, that is happening. Let me call the daily here and then bring the weekly here. What's the context? This is that retest. Again, you have to educate your eyes to see this chart. So I'm going to make it look like, see, we were more open like that. This is that weakness here. So we're retesting higher on the price, upping higher, retesting on the same level, sometimes in the shorter term over here, eclipsing previously established tops. But technically, we're not eclipsing. We are trending lower on our toppings. These are called negative divergences. And they are happening within context. What's the context? Well, the context is that, if you remember the wire analogy I just used a couple of minutes ago, we introduced weakness to the uptrend of the weekly via the pullback. See, it's the same mechanics from higher time frames to lower time frames. You can do this same comparison on a daily against a 60, or you're on a 60 and you do it with a 15, or a 15 and you do it with a 5, or a 5 and you do it with a 1 minute chart. It's the same mechanic. Okay, so you introduce this pullback on the price, continuation, this pullback and continuation on this uptrend gives you this pattern. Now, this divergence is coming to a head. These are called cycles. Down cycle on the cycle of the daily here ends with, at this particular point, I showed you that 15-minute chart with a 60 bottoming positive. So that pullback ends. The support comes from underneath on the lower time frames that fuel the continuation. Then we enter on an up cycle on the daily. The daily's up cycle is interrupted by this pullback and continuation. Let's not forget, let me call the 60-minute chart here. So now we have the 60 here, and this is this pullback. This whole thing here is this pullback that we introduced. Take a look at how, as I click over here on the 60, it correlates to the introduction of weakness on the up cycle of the daily. Let me not lose you here. So we pull back long, technically, on the 60. That means we're finding an uptrend. So then you have the bottoming over here. Boom, 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 boom. I showed you the 15. Bottoming positive towards the upside. Then you have the continuation, gives you a negative divergence. At the end of this up cycle on the hourly, you're going to have a 15 that is going to top negative. See, let me bring the 15 here to this particular moment. So we're coming up over here. What is the 15-minute chart doing? See, it was bottoming positive over here. Now it's topping negative over here. The context is clean. We have a negative 15-minute divergence at the end of the up cycle of the hourly. It is the same pattern, because remember I told you, this is a little long, it's a little wide, the divergence on the hourly. Bring in a 2-hour and make it a little more cohesive. This is it. And it is the same mechanism at the topping of the 15 that puts this thing into motion to the downside. You have a series of price retests over here, but the damage is done, and soon you have the drop. Boom. See? And so this 2-hour pattern, let me move the 2-hour here, right here. Okay, it's the same thing, right here. And now let me bring about the daily chart here. This pattern is happening in the context of what? In the context of the end of the up cycle of the daily. So the daily is topping negative. So let's not forget, we have a beautiful entrenched divergence over here, negative on the 2. Let me bring the daily here. Let me bring the weekly here so that we can see the larger context. So this is that daily again. Let me just make it a little wider. This is the introduction of that weakness, the continuation. So that introduces weakness to the uptrend of the daily. We're topping negative. On what context? The context is that we already dented the up cycle, the uptrend of the weekly. The weekly is not compromised. The weekly itself has been topping negative forever. Take a look at this. Is back in 2012. Take a look at how we established a technical bottom, a technical top rather, and we are now here in 2016 lower technically than this point, or you could say that the technical top really was reached right around here somewhere in 2013. This is May 24th. Take a look at how from that point we haven't been able to eclipse those tops. we're topping lower, lower, lower. Every time you have the technicals turn in the direction of these negative divergences, you have these pullbacks on this trend that is unnaturally being propped up by banking cheating, by the Federal Reserve printing money with zero interest rates. So that money is then given to the banks in turn loan it to companies that in turn use that money to buy their own stock to continue this fallacy of higher prices on the market, which is wrong because the market should have been allowed to do its natural down cycling to keep the prices in check. This is where the economy gets really complex, and then you have to get into fundamental analysis, which I don't want to do. Because for our purposes, when you just focus on technicals, the technicals will give you the turn no matter what's going on with the fundamentals. They come to a head, they coincide, and then you have these massive movements. So we have the end of this up cycle on the day. Now, is this divergence not wide? Yes, it is. Then you can bring in a 2-day chart to bring more cohesiveness, if that's even a word, to this pattern. So I'm going to bring in a 2-day chart. There's the divergence. See, and the divergence is happening within the context of a compromised weekly chart, which is in turn topping negative long term. So when this is the question that you have to ask yourself: what's going to happen when this thing down cycles? And isn't this weekly down cycling within a larger context? What is the context of this turn? The context of this turn is a nasty monthly negative divergence. Take a look at how the trend established itself on the turn of the monthly back in 2014 at the end, beginning of 2015. This thing started. These pullbacks are nothing more than pullbacks on trend. They come back up. Technically, we're down here. The divergence never went away. What happened is we had this prop up of the market. Again, we introduced weakness to this weekly here. Then the up cycle ended. It ended, and then you have the continuation of the trend that has been established from here. Then the weekly down cycles. You can go back and bring in a daily to see the patterns that took place over here that held turn is weekly, just like we are having now here. See the context? See the introduction of weakness to this uptrend here? The end of the up cycle of the daily here, it comes to a head. Then you have the drop, then you have this pullback on trend, and this is where I messed up enormously. Because if we come back up over here, you see, take a look at this. This pullback, the trend has been already established. We pull back, retest higher, we start dropping over here, then the lower time frames end their down cycle, so they pull back. They up cycle a little bit, but the damage has been done. When this pullback happened, the weekly had already turned, and it had already turned within the context of a monthly negative divergence, within the context of a quarterly chart that is a 15-year negative divergence. This thing is turning here. This is catastrophic for the market. And then you have this Brexit thing come in here and happen right on Thursday, Friday. I was positioned over here, waiting it out over here, because I said to myself, okay, I got you. We are technically topping on the 15, so this is going to do a little bit of a number on the price over here. The price hardly moved against the trend because we have a 60 that's still very, very poised. And then you have the upside. Then the Brexit thing comes in, and the price gets slammed. What I was going to do here is, when I say I fell asleep at the helm, I did and I didn't. Because I know that the drop was coming. And if you go and listen to my video on Thursday, I said categorically that there was going to be a catastrophic drop. I called it. I didn't enter it. I didn't participate in it because I needed to allow for this pattern to mature a little bit more. I wanted to establish a little bit of upside here technically, and then introduce some erosion with lower time frame negative topping, and then nice and easy enter the drop. It happened overnight. I should have actually, understanding that the context was pretty clean, I should have ventured out and put in there money, not a lot of money because there's some inherent risk of a little bit more upside in here. But I should have put in here a little bit of money and let this thing slam itself. It made a fantastic return. Just allowing the picture to be taken here, 10:05. Boom, there it is. The 5-minute interval here. So I should have said to myself, you know what? We have a 15-minute negative divergence here on this context. We introduce weakness to the hourly here via the pullback and continuation, which yields the divergence, and then we are negatively topping on here. This is this whole thing here. So I should have said to myself, you know what? If anything, the worst thing that can happen is that the price stops a little higher. This divergence is not going to go away. All I need is for a 5-minute to down cycle on this thing, and then the price will drop. I should have said that to myself. I didn't, because lack of confidence, lack of enough capital in my trading account, which it really cuts my balls off. That's what it does. And then I am emotionally distressed in my household here with a bunch of drama going on. And then my printing business is in shambles. So I'm trying to trade over here, but the business that's supposed to support me while I figure this whole thing out, which I have already figured out, is dying in the middle of this whole storm, has me mentally fucked, basically. So it impairs my decision making a little bit. But that's what happened. And then, shoot, I could have entered a position here on the 209 puts. And if we go take a look at charts, I have over here, let's see, here's my video on Friday, where I am clearly talking about the 209 puts. On opening, they need 406%. 406%. I mean, any money that you put in there would have been an amazing trade. You put in $1,000, you turn $1,000 into $5,000. You could put in $200 and you turn $200 into $1,000. You could put in $10,000 and turn them into $50,000, and so on and so forth. It's unbelievable. Unfortunately, it got away from me, and there's nothing we can do about it other than I didn't make the money, but I did make the experience. It's a tough break right now because I really need the money now. But I am very confident on my breakthrough here. 11:02 now. The drop is beyond comprehension. Take a look at the 2 hour, the 4, the daily, the weekly. The price has dropped on opening. I mean, from the opening to now, $4.16. And from the turn of the 1 to here, to the bottom over here, $5.80. We're in free fall. We are in free fall. We are below 200 now. Can this thing go back up? It's now at this point unlikely. We have what looked like a 2 hour pattern is now an upside pressure pattern. The 4 hours is an upside pressure pattern, and the daily. So we have now only upside pressure patterns, which will fuel at some point in time here a pullback. And then we're going to have a continuation. Now, on the channel regression, see, take a look at how on the channel regressions, the bottoming over here, I had not really reached the bottom of the channel. And as it is right now, the bottom of the channel has not entirely been reached. The drop is so steep that this thing calls for like probably 197 or something, beyond what this chart's going to show us. If you take a look at the larger context, take a look at that monthly and the quarterly, they are now entrenched to the downside. This is catastrophic for the market, let me tell you. Take a look at VXX. Incredible charts. After looking at VXX, now it's 227. Take a look at what's going on. I've been watching this like a hawk, letting this thing bounce back and forth. We have the continuation that immediately yields an upside divergence on 15. Makes me want to take a look at the 10-minute chart. And yeah, definitely. I cannot emphasize enough how hard it is to do this from within the bowels of a house that's vibrant with
domesticality with fucking cooking and fucking wife walking in and out of my fucking office and just everyday nonsense. I can't wait to be able to separate my trading from my fucking everyday life. Motherfucker. They distract me every fucking 5 minutes. I don't even know what the fuck I was talking about. Yeah, the 10-minute chart. So we have a pattern here, and take a look at this 1 minute. It works. We moved the price already 50 cents, but this is my look. This is my 2 cents on what's going on right now. We are exhausting the first drive of this hourly, and now we are gathering support over here on the 15, and this should pull back. I don't want to participate on the pullback as it is risky. The momentum to the downside is just too strong. Take a look at the 2 and 4 hour and daily and weekly charts. So what I want to do is allow this pullback to play out. However much it pulls back, wait for this thing to get tired and catch the continuation. It is possible that this whole thing comes to pass even before the end of the day today. Because that 5 minute chart is already starting to look weird and long. The 15 is definitely long. So what I see over here is another continuation. I just need to catch a good defined pattern of downside. So let's just give it a chance. So here it is, 3:59, 45 seconds from the closing. Remember I was talking about this pattern? It became perfect over here. Right here. Right here. The 200 calls went from 122 to 175, or a 43% return. And we're talking about the quarter 2 June 16th that expire on Thursday, the 30th. So there it is. Take a look at how this pattern was able to flatten the hourly. Now, is the price going to get slammed tomorrow? Hard to say. The upside is pretty entrenched in here. It calls for 207. I don't think that's possible. But I can get the retesting here. I don't know. I think it's possible that the market opens to a drop below 199 tomorrow. Now, how about the July week ones? We're in July week ones now because this coming Friday is the 1st of July. So here's the 200 calls. But would I go for the 200s? Probably the 199. So let me show you the 199s, even though these guys moved from 148 to $2. But let's go for the 199 calls. Now these guys produce 29%. Why the difference? Well, first of all, we are entering the 199s versus the 200s. Let's take a look at the 200s. The 200 calls that are a little out of the money, 2 strikes out of the money, made marginally more, 33.56. However, the quarterlies, see, we're comparing now the 200s to the 200s, but these are quarterlies that expire on Thursday versus July week ones that expire the very next day on Friday. 43% versus 33%, a 10% difference. The reason here is that the time premium decay is more accelerated on something that expires on Thursday rather than on Friday. And it does make a difference. Now, if we take a look at the 5 minute time lapse, we can see the moment. There's the 1 minute. Having a pattern that kind of worked, then the price came back down. There's another pattern on the 1. The 5 minute turn, this could be construed as a definite entry at 225. Then the price tops out, comes right back down, eclipses previously established bottoms, not by much, but the damage is done. The 15 is ready, and we come back down again, and then the price finally moves from below 199 to almost 200. 199.84. This doesn't look like much, but it was a dollar pullback on trend. Now imagine that our entry had been on this very plausible scenario, 225 to 23 to 22 to 20. Where is that at? Right here. If we did that, and these are the quarterlies, the 200 calls, they went from 150 to 175. Only 16%, because we didn't catch the very bottom. So this yields the better return. This is the problem with trading something that doesn't have the ability to move the price all that much. And the context is just not right. The context over here is, and I said to myself earlier, I'm just going to let this thing play itself out. It's Monday. It's going to be a small move. Now, it was a dollar move because the range of the previous drop is huge. I mean, we're talking $12 or something at the very bottom over here. $12.16 is the drop so far. And if we quantify that with percentage, that's a 5.80% on stock. So this is the second pullback on this move. Can this pull the 60 back against this daily? It's possible. It is definitely possible. You can go and take a look at VXX. VXX had a more defined 15-minute negative divergence. Compare that to SPY. SPY had an upside pressure pattern versus a divergence, same moment. The 1750s. The 1750 puts over here. But again, it's Monday, and it's a pullback on a very established uptrend. Take a look at that weekly, pointing up. Take a look at that daily. It's amazing that this thing got away. Let's take a look at Qs. Similar situation, we don't really have a really good defined divergence. It's really a 10-minute. It also moved the price. There's Russell. Limited damage. Here's Russell on bigger context. Take a look at this monthly, slamming the price back down. Take a look at the direction of that quarterly. How's Q's looking like over here? Price is coming down. Take a look at this quarterly turn. 15-year divergence. How about diamonds? Perfectly established divergence. Take a look at the pattern here. And near perfect retest. It's really amazing that I didn't catch this. And over here we also lacked a new pattern. How about FAS? It was really a 10-minute. This is a larger context on these guys. Look at that monthly. Now on Friday I did a couple of things. Take a look at Freeport McMoran. Here's the daily, weekly, monthly, quarterly. So this is the context. The context is this thing is resuming the downtrend. Take a look at the drop here. From there, we drop to the 1560 daily weekly. And over here, I'm specifically calling the moment where this 15 is rolling over on this fantastic pattern. I would go for the 1150s, around 1215. Here's a look at the 151560. We have negative pressure, negative divergence on the one. We have an established 5-minute. The 15 is rolling over on this context. The context, again, is clean on the larger context because we are resuming the downtrend. The pullback over here on the weekly is long, and we have a lot of resistance, negative pressure here on the daily. The daily pullback, and the 60 comes in here with a beautiful pattern. So that worked. And if we take a look at the 11150s, entry around 1215, here it is, 1213, 5-minute has a negative divergence, and the 15-minute is rolling over on the 60-minute negative divergence. These options were 12 cents. This is Thursday. This is Black Friday. So you could have entered this thing here on the 23rd, Thursday. And this is the opening of Black Friday. Here's the options again. Meandering around the same levels throughout the day, and then on opening, you're at 366%. Now, would you have gotten out right away here? Let's take a look at this. The 1 minute technically bottoms, then it pulls back long. We have a continuation here. I think it's time to open up these charts here and see what happened. Take a look at how Freeport-McMoran continued to drop. Wow. So the 5 minute reaches its technical bottom here at around 10:25. So 10:22, this is a pullback right here. Then you have the continuation right here, and that gives you 466%. At this point, the 5 minute is technically bottoming on a 1 minute upside divergence. Here it is. See what I mean? Now, the price continued its trek to the downside because the momentum is very strong. So this is where, depending on what you were doing, see, this is, I didn't mean to do that. This is a Friday trade. This is as much risk as I'm willing to take. This is the pullback of the 5. See, this is the technical bottom of the 5. Here, the 5 minute pulls back, and then it hooks down, it continues, and then you have a new upside pattern here on the 1. You can zoom in there to make a little more sense of this thing. This is the 5 minute technical bottoming on the 1 minute upside divergence. Then the 5 minute pulls back. All the while, the price continues to drift. Then we create a 5 minute divergence, and this creates the technical bottom of the 15. You could have done that, but you had an amazing amount of risk. Now, that is around 115. That is right here for a 700%. Now over here, this is around noon, right here. That's a pattern that's forming over here, so this thing pulls back. This thing has so much momentum that it continues. See what I mean? Now, if we go and take a look at the larger context, this is the 5 minute technical bottom. This is the pullback on the 5. This is the continuation. This gives you the 5 minute upside divergence that gives you the technical bottom of the 15. This is this pattern right there. This pattern, gives you the technical bottom on the 15. Then the price pulls back from there, and then it slightly continues towards the end of the day, which is this. I would have been extremely happy at 466%. Understanding that there is a possibility to milk a full 700 out of it because of the incredible momentum that the context has, the larger time frames. At this particular point, the daily had already turned, the weekly's pointing down now, and we are in the middle of the resume of the large trend. See what I mean? So that's Freeport-McMoran right there. I took another picture for Oracle. And what's interesting is that on Oracle, I didn't take a picture of the actual stock for some reason. But take a look at this. On Oracle, we have this pattern. It's very similar to Freeport-McMoran. What's the larger context? We are in continuation mode. The weekly created this lackluster pattern. This is a pullback on trend that went crazy all the way over here. Take a look at how this gives you a very interesting negative divergence on the 60-minute chart with context. Context is really clean. And so at this particular point, I'll show you the 40-50s. This is a Thursday to Friday. The 40-50 puts on Oracle, they don't have great charts, but look, they went from 16 cents to 54 on the open, and this is questionable because the quality of these charts. 230. Oh, you know what? I made a mistake on this thing because that's 16 to 97. What's 16 to 97? 16 to 97 is 500%. This should have been 500% right there, right? And again, you have the drop, then you have the pullback. I guess we can go like this. You have the pullback on the 1 minute here, like crazy. And then the continuation gives you a little bit of a pattern, which technically bottoms the 5 minute around 10:23. By 12:13, somewhere in this area, you have a little bit more of a continuation. What you have in there, 500 some percent, like I told you, 506. And last but not least, I want to show you the 40 puts. These guys made all the way to 800%, 400 on opening, 500 by 1 o'clock. Again, just a few studies over here to show you the dynamic and putting things into context. The context is always paramount. Quick glance at USO. Take a look at how USO crossed over to below 11. And we have a pattern over here. This is long. This thing here says that this thing is going to get slammed. That's what that says. Quick glance at fast. Oh, I'm loving this thing. Take a look at how awesome it is to see this thing drop all the way to the ground. The monthly is turning. Now, come Friday, we're going to have a plot of the monthly. It's going to be very interesting to see what happens over here. Now, over here, we're certainly hitting the channel regression. And we have some support. What we don't have is anything to stop this thing. We don't have a pattern to stop that daily, and the 2 and 4 hour charts are going. There's a lot of momentum to the downside here. This is awesome. Take a look at how these guys went from here to here. They have lost 15.59% on stock. United Health. This guy got puts. United Health is going back up over here. And I want to see Boeing. So I'm looking at Gregory Manarino's trade. He bought the Boeing calls. Take a look at these. And I told him, you bought at the end of the regression. This thing is going down. This guy bought around this area from 137 to 122. He's down to 127 is $10. He's down $15 on this thing. On those September calls. Take a look at this. We can go and take a look at these calls and see what he paid for them on the 28th. Okay, here's the chart. This is pretty fucking catastrophic. Okay, but those options, he said that he bought on the 28th April. BA, that's Boeing, 140 calls, the September 16th. Let's go. The September 16th, the 140 calls on April. This is back. I don't understand this because BA, September 16, 140 calls. 140 calls, September 16th, BA. Well, whatever he paid for, he's down huge. What I don't understand is that this is as much history back as this thing will give me. That is really odd. Because this is June 20th. Let's see something else. Chain. VA. September 16. Let me see. All. The 140 calls. There's not a lot of options. Open interest. They have a 6-cent spread. And they're at 74.80, which is clearly represented here. Well, at whatever price he got them, I don't know if that's even possible. I don't see these options mapping back to April the 28th. This guy might be lying. But either way, he's losing his shirt. Because this topping over here would correspond to this topping over here. That means that he paid for those options much more than this. I would say probably like 5 something if they were available there. And they are 80 cents, 74 cents really. He's down 80% on that thing. Interesting, isn't it? So anyway, enough of that bullshit. What is the prognosis over here? We're in the middle of this pullback. Can this thing sustain? I don't know, this 5-minute looks like bullshit. It is possible that in post and pre-market, this thing completes the pattern and we have the continuation. But I'm not going to enter that. I have to wait for a more defined pattern. Another pattern will come on. We'll find it. So let's see what happens tomorrow. It's going to be Tuesday, June the 28th. Until then.